So let me welcome on board Dr. Satyanarayana Chava, the founder and CEO at Laurus Labs, joining in on the show right now to talk about what the prospects are going forward. Dr. Chava, great to have you today on ET Now. Thank you so much for taking the time out. First, let's address the bad news, because during your last earnings con call in the month of May, you assured investors that your margins will not go below 20 to 21%. But now at 14%, is what you've clocked. What were the reasons in the quarter gone by for this kind of a sharp fall?
See, the first we have to consider the margins for the revenue what we have done. We maintained margin levels around 50%, similar to Q4 FY23. When sales were down, all our EBITDA numbers and PBT tag are down. We have orders, but the shipments were moved to Q2 from Q1, so the revenue was less in Q1. But otherwise, our market share in the products where we are operating is pretty consistent. So internally, we have no concern. We clock less revenues in Q1. That's the number what we had in mind when we started the financial year. So it is not a surprise for us. We are doing as per our internal plan, and we are confident to get back to normal levels very soon.
Normal levels in the second quarter, do you hope to get back to that 20-21% kind of band?
Yes, definitely yes.
Okay, great. Also tell me, what's giving you confidence to you? Because, like I just highlighted before we welcomed you on board, the kind of guidance that you've actually given out, that's something that's, really impressed the street. What gives you this kind of confidence on the recovery of ARV, which is now much awaited by the investors as well?
ARV is very critical part of our business, but that is not going to be critical part for our growth. So we maintain our ARV leadership position in both APIs and formulations. The Global Fund order started kicking in from Q2 onwards. So we have a very good order book for Q2. And our ARV APIs, we are almost consistently doing about 400 crores for last quarter we did 400. This quarter I'm sure we will do same number, if not more. So ARV will become stable from Q2 onwards. APIs will do similar number, but formulation will do bigger than what we did in Q1. In Q1, we did about 190 crores ARVs, and this quarter looks bigger than that. And other CMO, other oncology products, we have a very good order book right now. So the confidence in Q2 is coming from our order book, what we have in our hand.
Some more details. You talked about margins and why they were hit in the first quarter, but the numbers have been missed on all counts, right? PAT as well as revenue as well. What do you think is going to be firing all engines in the future quarters to come for you? And why such a big drop in the quarter gone by?
You are comparing the quarter FY24 with FY23 first quarter. In the first quarter of FY23, we did execute a large POs for a big pharma. So there is a bulk of supplies went in that quarter. But we have very good projects from big pharma at various stages of implementation. And we also signed a contract for a long-term contract for a crop science company. Our animal health facility was inaugurated in June. So there are a lot of positives in the organization. But you also need to keep the diversification efforts what are being done by the organization. We are moving away from being an ARV company to well-diversified organization. So in the previous years, our 2018, if you compare, 73% revenues came from ARVs, both APIs and formulation. Last year, only 37% of revenues came from ARV, APIs, and formulation. Actually, we gained about 600 crore more revenue from FY18 to FY23. While we increased our ARV revenues, we were able to decrease the contribution from ARV significantly. So those efforts are yielding the benefit, yielding the growth. In fact, our growth drivers in the future will be non-ARV, both APIs, formulations, and also predominantly from CDMO.
Morning. Now, for the CDMO business, there's human health, animal health, agrochemicals, etc. in terms of verticals. Can you walk us through the margin profile for each of these?
See, in the case of animal health, we have a basket of products which are under patent, which are in clinical phase, which are genericized. So margin profile is no different from human health CDMO. Very similar. And in the crop science chemicals, we are not looking at one step, two chemical step, thousands of tons crop science chemicals. We're looking at complex chemicals where there is a chemistry skills are involved, biocatalysis or hydrogenations are involved. We are looking at those kind of crop science chemicals. So our margin profile will be, we believe, will be very similar in any of the segments.
Okay, fair enough. And you've also signed a contract with a company for agrochemical CDMO. What are the details on this?
We did supply registration batches last year, and we are about to set up a commercial plant for them, and supplies will start end of next calendar year, right, 2024. And because of our ability to execute projects both at R&D and also commercial scale, we are about to sign another project with the same customer, and we are talking to a few other customers on the ag space. That's also looking interesting. As I mentioned, I don't mind repeating it, our focus on agrochemicals, crop science chemicals, is complex ones. We are not doing 10,000 tons, 20,000 tons, but we are not looking at that.
Dr. Chava, you also have a very high Capex plan and at the same time have high debt guidance as well, right? As I understand, and please correct me if I'm wrong here, your current net debt leverage is already at 1.6. How do you plan to tackle this, and do you think you're going to be generating positive cash flows in FY25?
Definitely, yes. See, this year and last year, our Capex intensity was higher because of our commitment to deliver batches, validation batches at the commercial scale. We set up huge capacity. And even look at our animal facility, we invested in the entire site we are building. And each block will go into commercial at different times, Q4, Q3 one block, and Q4 one block, and then Q1 next financial year another block. So these Capexes are well spread. So we don't expect to use Capex next financial year. But if there is a need, customers are willing to do projects, we don't mind spending Capex. See, if you look at our return ratios are much above the debt burden or interest burden for us.
All right. Thank you so much for taking time out and joining in and giving us that view on how business is shaping up for Laurus Labs.